Sebastian has been writing a lot about Brexit. You have been very close to a lot of the decision makers in the UK, Alan. It's really not very clear what's happening just reading what we all read about Brexit and whether it will actually do the good that the original promoters of Brexit thought about. What is your thinking today, Sebastian?
I think to me, there's no doubt that the promoters of Brexit were selling snake oil. I mean, UK growth has already gone from the top of the G7 table to the bottom. There's a lot of anecdotal evidence of financial institutions rebalancing out of London. Mm-hmm. It's not that they are forcing their London staff to move, but when they add new staff, it's in Paris or Frankfurt or Dublin.
And Unilever.
Unilever, exactly.
Yeah, the news about Unilever.
It's got to be the case that it's a less attractive destination for Japanese direct investment, because if you can't move your auto parts across borders, or you may not be able to because it's uncertain, that's unattractive. So clearly, not only does the UK have to pay a very large exit tax in the order of $50 billion when it leaves, but also there are going to be these supply chain disruptions to financial services. Theresa May, the Prime Minister, proudly said that she had a plan called the Chequers Plan, and that it would very cleverly allow the UK to retain frictionless trade in goods and agriculture. But services were not part of her vision.
And that's the biggest part of the economy.
It's 80% of the UK economy. So I think there's no doubt that this is a very bad thing economically for Britain.
And is there any scenario under which they might backpedal, or anybody might backpedal?
So my friends in the movement from before the referendum, of which I was part back then, I helped to found a website called In Facts that tried to put facts on the table. Facts were ignored, and my friends who still are in that fight are campaigning for a so-called people's vote, in other words, a second referendum. Realistically, I would attach 10% odds and not more to there being a people's vote. Neither major political party, Labour or Conservative, has an appetite for a second referendum. And it's not clear what the question would be, because there would be three options. There would be, stay in, leave without a deal, or have some kind of deal. How do you design a referendum around three options? So I don't think it's going to work, much as I wish it would.
Alan, what are your thoughts on Brexit?
Brexit was a mistake. Why are we trying to make it better or less worse? A repeal is the only rational thing that I can conceive of. Remember, Brexit is basically populism, which emerges historically since the Industrial Revolution periodically, and has usually parked itself in Latin America. What it is something which creates a slowdown in productivity growth and in standards of living, and that it induces a revolt internally, and people who had been living at a much higher level cannot adjust to the fact because they don't know what's causing it, and therefore populists of all sorts, whether it's Latin American, did I say American?
Yes,
yeah, I did say American. It doesn't matter. It has the same effect, and that is to bring the level of discussion and concepts to a primitive level. And I find what bothered me most about Brexit is that there was no way that Brexit can work. I mean, and I think we've observed it, and we've went through years. I think we put it, the best way you could put it is Britain went from here down to there. And it's all Brexit. And the notion now of not even allowing the issue to come up for another referendum, and I'm not sure it's going to pass. I would have thought that if it were brought up immediately after the original very narrow victory, it probably could have turned at some appropriate time. But now, I don't see, and I mean, Sebastian would know better than I, any underlying swell in Britain to get rid of it. I mean, everyone talks as though how you're going to disengage from the EU in the most simplest way. We shouldn't be. I mean, those sorts of agreements are what makes the international system function. I mean, I was part of the NAFTA discussions, and what people didn't recognize and currently don't recognize is we were very conscious in the United States, the delegation, that by doing what ultimately ended up as NAFTA would help Mexico more than any of the other more than Canada or the United States immediately. But it was to the long-term interests of the United States to actually have that happen. And indeed it did happen. And now we're going to unravel it. And no one is going to explain to me why it makes any sense, because it doesn't.
Staying sort of on Brexit and Europe, Mr. Draghi last week also said interest rates are not going up, but the economies in Europe are starting to really show great signs of not just life, but some of them are doing really, really well. Does that worry either of you if the pace of interest rates going up there is too slow, or do you feel things are not moving as fast on the economy? So best to be where Mr. Draghi is.
I'm actually concerned about another issue. Is that you know what Target 2 is? Target 2, for those who don't follow the stuff in some detail, is the mechanism amongst the European central banks, the members of the European Central System, who exchange on a daily basis credits. I mean, the Bundesbank trades with the Banque d'Italia or Banque de France, all day long, and they close the books at a certain time. Well, if you look at the pattern of what's been happening within those lending system, the Bundesbank has become the major dominant lender. And aside from that, it's basically been Luxembourg as the second largest creditor. The rest are all debits with basically, as you might expect, Spain and Italy being the net debtors. But that flow of credit going from the north, I mean, essentially Germany, to the south in the trade accounts is the same thing. And unless and until we recognize that this is an unstable situation, it can't continue, because at some point, Greece is going to become the prototype of all of the European countries. And the thing which fascinates me most is one of the major debtors in Target 2 at this stage, and has been the case for a year or so, is the European Central Bank itself. And that is, I mean, when I took a look at the numbers, I said, no, there's no way that can happen. And I went back and I looked and I looked and I looked, and those are the data that the European Central Bank is indebted to Target 2, meaning to the Bundesbank. Now that is an unstable situation. I was a debater on the negative side of the euro from the beginning. I was wrong for the first number of years, but my fears have come up to a point that I think that the European system is unstable, but not because of what we've been just talking about, which is also a problem. I'm not denying anything. I agree with everything Sebastian said. But I think superimposed on that is how long can you get a system where there are continuous flows of credit from one part of an institutional system to another, and I think there's a limit to that. And I don't know how it's going to break up or in what form, but I don't know the reason why, I'm guessing probably more than I should be, that the system is as it is that there's a grave concern on the part of the Germans of going back to the Deutsche Mark, which is a much stronger currency than the euro, and it will create unemployment, and the political system within Europe is not such, or within the German Federation, is not such that it can be politically handled. And I think that there's an instability here which is going to hit us at some point, and it'll be characterized by Germany getting out of the euro, going back to the Deutsche Mark, having an extremely strong rise. And, I mean, we don't know what the actual exchange rate of the Deutsche Mark is, but it could be shockingly different than one expects. And obviously the reason that Germany as a whole decided not to go back to the Deutsche Mark was its impact on the economy.
One of the fascinating things about Europe right now is that, your earlier question was about Brexit. Right. And Brexit is a stupid and disastrous experiment in de-globalization, in disintegration. The euro, on the other hand, was an experiment in overreach of integration, too much integration. And so Europe's sort of getting it wrong in two different ways, in opposite directions. I think
that's a very good way of putting it. Yeah.
And I think Italy is really important to watch. I mean, you have this populist government, they're about to come out with a budget. It's quite possible if the
the markets have liked what they're doing, it seems so far.
They've been going back and forth. I mean, recently they've been trying to reassure the markets, and if they come up with a budget which essentially buries their promises to voters, which included reducing the pensionable age and introducing a universal basic income, if they bury those and come up with a more or less plausible, kind of almost balanced budget, the markets will be happy and Italy will be okay. But if they politically feel they have to deliver on some of those promises, then the budget deficit will be bigger, the markets will be worried, and I think there are two equilibria in Italian bond rates. At the moment, we're hovering just below 3%, and at that level, Italy can service its debt. If the markets get worried and 10-year government rates are shooting up 4 or 5, they were quite a lot higher than that in the crisis, then it becomes very hard to see how Italy has a sustainable debt level. And I think for the central bank, that's why Draghi's job is so difficult. He's got to be worried that if the politics in Italy go wrong, he's going to be back into crisis-fighting mode, trying to drive down the long end of the Italian yield curve.
Don't you find the fact that, say, the 10-year notes of both Italy and Spain are yielding less than the U.S.? I mean, it just strikes one as an abnormality, or maybe it's a signal of how bad we are.
Or just the power of a determined central bank led by Mario Draghi. I mean, I think he's anchored those rates by buying that paper.
At the same time, the Europeans seem to be on the other side, sort of their regulations seem to be moving this way, maybe with the privacy and how that could impact our technology sector here. Mm-hmm. Do you think that matters really, or you don't think that matters in the US, more globally, outside of Europe?
Well, I think that Europe has a long-term problem that it never completed the digital single market. Therefore, digital industries in general are pretty weak in Europe. Clearly, there's a two-country race between the US and China when it comes to AI. If you think about market cap created in things like digital e-commerce, it's essentially a story of, Amazon and Alibaba, and the Chinese ecosystem is a rival to the US, but really Europe is nowhere. So I think that's a big strategic challenge for Europe. The Europeans would say, yes, but at least we're thinking about how to maintain civilization in the face of, all these privacy invasions by the tech companies. And there's some truth in that, but I do think that this GDPR regulation, which is protecting consumer privacy, is really overhyped. I mean, I'm on the receiving end at the moment. Every time I go to a new website, it says, if you want to do the next thing, click here and accept our terms. So I click, and as somebody put it to me, they've just spent money on consultants to create new sort of digital wrappers around their websites. And the consultants made money, I just click, and I'm not sure my privacy is any different to how it was before. So I think it's going to take more than a bit of European regulation to solve the bigger societal questions about, the tech companies and privacy.
Talking about technology, we haven't talked about emerging markets. Obviously, what we're seeing, two forces happening. One is technology seems to be a very important way for emerging markets to leapfrog, whether it's in payment systems or in health sector or education or many other ways. At the same time, last year was a great year for emerging markets, but this year I think emerging markets have lost about a fifth of their value. Every day there is some piece of news, whether it's on Turkey or Argentina, especially, or some other emerging market that has a large amount of dollar-denominated debt. China obviously is sort of on its own, while it's still part of the emerging market indices. It may not be there for much longer as part of that and come out of the index and be its own index. But as we look at these emerging markets, there's sort of two forces. One is long-term forces, where there's obviously more growth, more opportunity, and then there are the other forces that are short-term. And we see these forces, meaning either you have emerging markets at the top of the charts when it comes to returns, so they get very high returns, or they overcorrect, as we're seeing right now, and are at the bottom. Do you see emerging markets sort of coming out of that?
That's the definition of emerging markets.
Yes.
So if they get out of it, they're no longer relevant. We use the term to actually designate a whole series of countries, but it doesn't mean anything by the countries. It means essentially how relative to developed world are they. And by definition, you are choosing those who are weaker than some standard which you don't apply to Britain or Germany or the like. And so emerging markets will never be where we'd like them, because when they do, they'd cease to become an emerging market. They've emerged. Emerging is the critical term, and it means something. It means
overshooting either direction.
Yeah,
as you were saying, it also means fast growth. I mean, if you look at the WEO from the IMF, it's still the case that the projection for emerging markets this year is 5% growth, whereas the developed markets, it's sort of 2.1 or something. So, emerging markets still growing twice as fast, but with all this financial market volatility, as you say. I think it's good to remember that the two poster children for instability right now, which are Argentina and Turkey, both have very strong idiosyncratic reasons for why they're in trouble. In the case of Argentina, it's essentially that, you had this disastrous populist period with the Kirchners, which left all sorts of distortions in the economy. And I think Argentina is, paying the price for that. When you inherit enormous amounts of bottled up inflation, a terrible budget position, you start to dismantle some of these stupid regulations, and it the distortions sort of double in the other bit. And so I think the Macri government, which has also made some missteps in how it's handled the relationship with the central bank, is the reason you have this big problem in Argentina with a 50% devaluation this year is the idiosyncratic political history of the Kirchners. And then, meanwhile, in Turkey, you've got a populist who's in power now, an authoritarian right-wing guy who doesn't mind, saying that raising interest rates will stoke inflation, which is back to front, of course. Just over the last few days, you've seen the central bank surprise the markets with a rate hike, 24%. Which was, constructive because they needed to stabilize the currency. But immediately, President Erdogan comes out and says, I will be impatient with this. I'm watching this, okay for now, but don't expect me to put up with this forever.
He's behaving like every president in the world.
But worse, right?
Questioning their central banks, something that is new, yeah.
But so I do think that both these countries...
Erdogan is always the prototype. And if you watch Turkey very closely, you'll learn a good deal about this whole concept of developing and non-developing countries.
But I think if you look at some other cases like, Brazil is going through a very tricky election. The candidates include, a right-wing person who's standing up for past dictatorship, and so represents the regime of whatever it was 30 years ago. And then left-wing people who represent the regime of 5 or 10 years ago, which is really not attractive either. And so you'd expect that Brazil would be in free fall, but it's not. No. Because it's got enormous reserves, and it's come out of a recession last year, and it's okay. Russia, the currency is under pressure, but the central bank is proactively taking action, raising interest rates, and as far as I can see, the Kremlin is letting her do that. So I think that we might look back on this phase and say, well, emerging markets have made policy improvements. They do have foreign currency reserves. They do have flexible exchange rates. They do let their central banks act on the whole independently. Turkey and Argentina were bad exceptions, but as an asset class, emerging markets came out okay.
Thank you very much.
I'm sorry.
No. Can we hear from you, just a couple of minutes, when the book is coming out, and if you want to, I don't know if you're willing to share anything about the main conclusions, or we do that for the next call when your book is physically out and in the stores.
Well, working backwards,
yes,
as you know, because Sebastian knows probably more than both of us, the publication date, which means you shut down the writing way in advance of that. And if you're doing something that's in the area of forecasting or looking at the future, it's a very precarious activity to be in.
Yes.
And so I'm in, even though the book is not published, it's out of the hands of Adrian Wooldridge and myself. He's a co-author. And we're just hoping that certain events don't occur between now and then. And so what you do is you tend to write in sort of a fuzzy manner. It captures all possibilities. And it's going to be terribly interesting because they set us up, our publisher set us up with a lot of publicity for the book. And my problem is how to stay in, say, 1903
Right.
and not get forced into the current period where you have to say something about the future. But we'll work it out. And,
Wonderful. And the FT already has it as one of the books for this year. So for the award.
You've done well on that list.
Yeah, absolutely. And Sebastian, who wrote a book most recently about Dr. Greenspan, is working on a book on venture.
Yes, so my next book is a history of venture capital in Silicon Valley, trying to answer the question, why did Silicon Valley emerge and why did it dominate innovation really from the 60s through to today? There's lots of macroeconomic literature about why a country might grow faster than another country. But what about the question, why does one region in one state in one country dominate not just one industry, but a whole series of innovative industries for that long? And I do think that the nature of the business culture, the ability to have startups, to form them, combine with somebody else's, sell them, close them, reinvent them, that very flexible corporate structure allows for iterative experiments in creating the future. And the reason that exists is venture capital. So I'm trying to write the venture capitalists back into the story of American innovation in a way that I think most of the literature focuses on the entrepreneurs and the engineers, and that's fine. But I do think that capital, deployed in this special way by venture capitalists, deserves more credit than it's received.
Really interesting. Well, look forward to talking to both of you about your books. Thank you very much, Alan, as always. Thank you very much, Sebastian. Thanks for being with us today. And look forward to future events together.
Thanks.
Thank you.
Great.